Hey guys, I'm just recording some of my initial impressions on Palantir earning. I think before I say anything further, I think the purpose of this discussion is more for information and educational purposes. And whatever I say in this discussion is entirely my views. It has no reflection of how my employers and my colleagues thinks of the company. So my feedback entirely based on as an investor. So overall, like when we see the discussion today, I think it was pretty good. There were a lot of things that we can take as positive coming out of it. So from that part, I think it was still great, and I wouldn't say it was good, but I wouldn't say it was too great. And the reason for that is, see, when we talk about companies like Palantir, we talk about these companies that has potential maybe one day to go to $1 trillion. We're talking of these companies that can one day become monopolies. So the only question that comes with us is that in journey of these companies, there are going to be some inflection points. That means when the growth potential and the growth rate is going to be far higher than what market is expecting. So when we go into this earning, that's the question, and that's the point I want to calibrate, that how close are we to this inflection point. And the reason I say the earnings are good but not great is I still feel I think those inflection point are further ahead than what I previously envisaged. Having said that, let me just share my reflection on some of these thoughts. So overall, I think the revenue, which is one of the most important metric I follow, was okay to me. I mean, the year on year, the revenue increased 36%, which is lower than compared to what we have seen in Q1 2021 and Q2 2021, where the year on year revenue growth was 49%. I knew that the guidance was 385. I still expected that if we can beat the revenue or we can meet the revenue of a same order like 49%. It was a tough task to ask, but yeah, I still stuck with that notion, and I'll explain why. I knew that chances for meeting that during this quarter is quite steep, but still, that's what I stuck on. So 392 million, which is just shy of 400 million, is pretty good. I mean, if we look purely the companies who are in the big data space, especially in the SaaS domain, I think very few companies are actually raking that kind of revenue on the quarterly basis. So definitely a leading position, and it's pretty good from that part of it. I think the commercial revenue is increasing, and we expected it that commercial revenue will increase given their increased push on the sales and the renewed pitch which they have taken earlier this morning, earlier this year, especially like coming up with demo day and explaining what Foundry does. And guys, I mean, I'm in industry and I see what the perception is about the company. And to be fair, there is a lot of misunderstanding about the company. So whatever direction company has taken in order to clarify that what it does in terms of SaaS, I think it is quite commendable, and it is necessary. A lot of people in industry still don't know what Palantir does. Okay, a lot of people will still go and talk and say, okay, it's a service focused industry, it's a consulting focused industry. There is a lot of misperception around it, where people really don't understand it is a pure SaaS company. So from that part, I mean, I believe that as much messaging can happen, I mean, it will be really helpful, and I like the new messaging. I'll also like the new messaging and the uh, subtle hints that Sham has dropped in this call, that a clear value of Palantir is actually time to value. That means it's not only about like how much impact you can create with Palantir, it's how fast you can do it. Because if you can do it fast, then your resources and capital is free for a lot of things, which is quite critical, especially for large companies who are carrying very high capex and opex costs, as well as for the new companies or founders and startups where they are looking to increase sales fast. Like one of the example they mentioned was on Vezo, where they said like in 6 weeks or something they had like this workable commercial application. This is no mean deal. I mean, this is serious stuff. I mean, in 6 weeks, a lot of companies will not even finalize the wireframes for their apps. A lot of companies will not even finalize the draft version of their board paper on major investments and things like that. So getting a 6 weeks, you start getting something which can give you some sort of commercial revenue. It is serious. I mean, these companies which are coming under Foundry for Start, I mean, Foundry for Builders, and some of their pipe investors, which we know that kind of frontier pushing companies, they may not be bringing that much revenue as of today, but as long as they keep showing signs that having Foundry is giving them competitive edge, I think that's something to look after. I mean, I'm pretty bullish on that part when I heard that 6 week statement on Viso by Shah. On the US, I mean, it is the commercial revenue growth is pretty strong. They are seeing 103% year over year, and makes sense also. I mean, like what happened, disruption during the COVID. Also, US is getting in US. I think companies are getting more and more familiar with what Palantir is doing. I'm also listening, like, despite all the perception that comes from the media about Palantir at times, I there are people who discussed it in a way that yes, we'll hear that, but we are also hearing things from other companies that how great the product is. So people around me have started discussing about it. That yeah, I mean, we understand there is a stigma that comes with the company, but it's a great product. That's what we are listening. So there is an increased recognition, but that has to improve further. I mean, overall. So in this quarter, they mentioned like they added like 34 new customers. I mean, the commercial customers increased by like 46% quarter on quarter. Actually, that's very impressive. It's very impressive. I mean, 46% on quarter, and given we know that most of this probably came from US, which is also showing that the results that their sales team is currently putting in. So I think the sales effort in US is quite good now. But overall, sales is their bottleneck. That's my concern, because we all know the product is great. I mean, everyone, I have never seen complaints about products. I mean, everyone I talked about it, every demo I have seen and case studies, I think it's definitely, I mean, leading edge product from that part. So the majority is of revenue then is constrained by the business model and the customers they are serving. We also know that earlier this year they started kind of take this two-prong approach where they're going to one end for a large companies with a lot of legacy data, and on the frontier companies. So they are trying to come to the market from two end. So in that particular sense, it is quite commendable. I mean, what they are doing on commercial, but the sales and the business models are their bottleneck as of now. There is no doubt about it. We already have listened several times, like Alex has discussed, that how many modules are actually incorporated within Foundry. We also have heard at different times that some of these modules in different scenarios kind of wrapped up to build different products. In fact, I mean, Shyam mentioned that during the discussion itself today that they are trying to make build on the modularity of the platform. So if the product is good and product is scalable, we also know that in terms of overall scalability with the help of Apollo, I mean, they can actually scale quite fast and quite a lot. So the constraint in revenue is actually coming from the sales and the BD effort. We all know they came late in this game, and sales team cannot generate magic overnight. So one of the things which I was trying to calibrate is that since they started putting sales earlier this year, can it create that inflection point where revenues and some big daddy quarters can be delivered in this year? So the answer for that is still no. I mean, sales efforts are coming up, and as we are seeing some of this commercial growth, but we are not there yet where Palantir will start beating street guidance by a far bigger margin. It's doing very good. Don't get me wrong on that. I mean, I'm quite bullish on it. I'm just not bullish in terms of like a parabolic kind of a movement coming in growth or stock in a near future. I mean, that's I'm not an expert in predicting future prices. This is just my view on that part. So 54 deals, at least 1 million. That's impressive. Okay, I mean we have seen that earlier their ballpark was 5 million. Okay, and they reduce it and at 1 million 54 deals. So just to put in perspective, it is more than the overall revenue, annual revenue, so-called some peers, media calls in the same industry. So, and these are like so from that point of view, it's pretty impressive. I mean, it doesn't say like these deals happened with the new customers or existing customers, but since it used the word deals, that means it is new revenue, or at least not the recurring or extending revenue coming out of it, or at least extension or the optionality of some of the contracts they have done. Out of 54 deals, 33 deals for 5 million. Okay, now if you see these two numbers, 54 and 33, it is still telling you that the sales and the BD effort is still top heavy. That means they have a lot of customers which can spend a lot and they have good traction with them. They are increasing more into customers which doesn't have that kind of big pockets, but I mean they're getting some traction there. So I mean in a healthy business environment and where you are serving whole of the market, you will kind of see more in terms of pyramid where you say 33 deals of 5 million and probably 50 or 60 deals of 1 million and then so on. So I mean it's still skewed towards the bottom. So that's pretty much like money is on the table that is to be captured, and this is where the sales and BD efforts are important. 18 deals of 10 million. I mean, wow, that's quite remarkable on top of that. So between, if you see the 18 and 33, that means the ratio between 10 million to 5 million, I think it's pretty much okay. It's like kind of a 2, but the ratio between 33 and 54 is not like that. So the sales and BD effort in capturing more deals between 5 million to 1 million, I think that is where a lot of effort and focus has to be given in coming days. So in terms of like cash flows, I think I don't have any complaints. Like there is an improvement of cash flow in terms of that. And adjusted free cash flow is something I look at. I mean, it's good to be healthy. It's not something I bother too much as long as the company's health position and debt position is quite good. So this is just a checkpoint for me, not too much concern. Now, the remaining deal value, I think this is one figure which is quite interesting. Okay, so remaining deal value, I mean, if you wanna look in terms of like the contracts that has been awarded by the customers, have some sort of obligations or unexercised contract options. I mean, this is what should come to them. Okay, and you can see, I mean, like, so you think in terms of like some sort of secured revenue for futures, and at this particular point it is pretty much like 3.6 billion. So that means they managed to increase their long-term contract with their clients, either existing or new, almost by 50% in a year. That is huge, guys. That is serious number. Okay, that means you had revenue, you were capturing it, but you are signing new projects and or new contracts, and they are also quite long term. So I would say this number, I'm extremely bullish on that part. In terms of like commercial deal, we saw that how many customers have increased. So this number is quite high and it shows 101%, but we have to be just a little bit careful here because this started from a very small number from that point of view. But yeah, anyway, the growth is good and it's just showing that they are getting there into the trenches of commercial sales now, and they are getting good at it. Yes, I have to be very honest on this part. They are not the best commercial sales force at this moment, based on what I have seen. They are very good sales force. They are emerging into one of the sales force that could probably become one of the top sales force in commercial space. But as of today, a lot of work need to be done on that part. Okay, they are doing all the right things that could be done at this point, but yet the result is to come and performance has to be displayed. So overall, last year, since they had a billion revenue, and this year they have already crossed that revenue figure by 10% as we are coming into Q3. So when we go into Q4, I mean, whatever guidance they have given for 18 and whatever they beat by that, that would be the kind of actual growth that comes with it. I'm also expecting, given the year end, the push on the sales will be high. Okay, and also the same question that I'll be asking in the next quarterly earning as well is how far or how close are we to the inflection point where sales bottleneck in generating more revenue is removed. As of now, it is not removed, and yeah, I mean, I still keep that as the most concerning factor for me. Adjusted cash flow, like I said, I mean, it's pretty good. In the first 3 quarters, their cash position is improving, which means they can lower the barriers for entry for several of the new customers, and they can allow. And from that part, I think operating margin, cash flow, these are good. They need to be healthy, and yeah, I mean, no concern. Okay, guys, and this is probably the best part I like for any kind of investors presentation to you tell me like exactly what you are doing with client, and I want to see like the breadth of your solutions. I want to see the impact your solutions are going. So when it comes for breadth, I think Palantir is triple A. The kind of industries they deal with, the kind of solutions they deal with. It's just another example, like in the defense industrial base, what they are doing. Now the concern here is that, and this concern I know because, like I mean, I know in general as of industry, not in the context of Palantir, is that a lot of Silicon Valley companies that has excelled the big data OS or different parts of it, they lack the industrial context at times and as far as domain context. So that means when they deal with a domain person or when they deal with an industrial situation, it's not like what a typical sales process happen in a lot of B2C companies. Okay, it's a longer dance, and over the time these companies are learning it and doing it. But what I think is it's more important is how much effort they put into the domain specific sales. So what I understand from some of the recent postings that Palantir has increased focus on it. Okay, so results should come. Okay, now these domain sales is important from many contexts. Like for example, people sitting on beer and they can actually clarify a lot of confusion about the branding of the company. Like for example, somebody talking to other person in a space and they can say, oh, it's not consultant and services based company, it's a SaaS based company. That's a critical information if it is shared at a right person with the right context. So I think that is something they need to look upon, and I believe they are looking upon it. But yeah, I think given the bottleneck they have in terms of sales, I think they can do a lot on that part. Yeah, I mean, and what we are seeing also, like in terms of EV mobilities, I think in terms of we've seen that they work in terms of supply chain management, also in terms of like seeing the example of the charging station that came, and we all know like how big the EV and autonomous mobility is going to be there in the coming days, given their presence in the supply chain. I mean, so practically what we are selling here is they are getting prevalent in high growth industries. So as these industries grow, so should their revenue. Okay, so for example, if they are helping clients to menu in the suppliers for charging station, we all know that the US government has introduced new infrastructure budget. I also know like several countries are also going into the same route, and a couple of countries national roadmap I was working in terms of energy and EV mobility. I mean, these companies were also planning to invest a lot of money in terms of building EV infrastructure. So having a company in a sector which is going to be a high growth, I think it is a place to be. Okay, a lot of players would want to be, and they are building an image into this part of here. So yeah, I mean, they share a lot of other examples in terms of the NHS. One thing which is probably the most important, which came, the Sham said OPI today. Now, it's a term he coined or Palantir coined. I need to check whether it's there. So what he said, like operational API, and he said in terms of the word OPI coined for it. Now this is to me, this is one of the highlight of today's presentation. Let me explain why. Guys, I mentioned like that a lot of these companies are not very good in terms of industrial context. That means you have a product, but you have to apply on industry. Now, when you are connecting with a lot of legacy systems, I mean, what's your API management over look like? How do you connect with it? I mean, it's critical. And we discussed several times in past that big data OS has different systems going from legacy infrastructure or infrastructure legacy apps like Salesforce and ERP. And then you have the data layer, you have your API layer, you have your business apps and microservices, you have your DevOps, CI/CD, your API management, your cyber security. So there are a lot of things up there. But now, why I like it? Because when you use the word operational API, that means now you are talking in terms of specifically in the language which people in the industry want to listen. They don't want to listen mumbo jumbo about what is happening in terms of Silicon Valley. They want to understand what you are going to do. I am running these high-end risky operations. So the terminology that they use related to that, I think it is important. And my understanding is that moving forward, they'll be using it more and more. Okay. Yeah, I mean, we discussed also about the day zero companies. And like I said, I mean, so there was a question that was asked to me at some point of time that by doing this is Palantir buying revenue. So guys, these companies have no revenue. Okay, so Palantir is not buying any revenue out of it. Okay, if you want to buy revenue, you go to the client who are not able to hire you because of certain barrier, and you lower that barrier using the capital you have, and these companies kind of start paying you. So basically what happens, you convert the capex requirement for buying or acquiring Foundry into the opex requirement. I mean, so that these companies can come in. So that is called buying the revenue. This is not buying the revenue. When you talk companies like Lilium and Sarcos, they are practically an industry which is in infancy, which don't exist as of today. This is what I said. Like, so if you allow, and like I said in the example of Vezo, that they allow like 6 weeks, they managed to build a client ready application or a service ready application. So these companies have to tackle a lot of fronts: the technology, the regulatory framework, also in terms of managing and extracting best out of their data, both in terms of expediting their products to the market, as well as in fine tuning their go to market strategy and their price points. So that is something what they are building all of their ERP infrastructure on Palantir. And to me, I think that is big. We will not see revenue from this. Okay, we might see some revenue coming out of financing activities because they take some mistakes. But guys, some of these deals, I mean, they are going to be real winner. And think in terms of like same in terms of venture investing. That means one or two of these deals and the explosive growth that comes from some of these industries will actually be more than the all other combined. I mean, of course, Vezo, Lilium, Sarcos are some of the best. I also came to know about another startup. I cannot reveal the name at this particular point. It's in US, and I mean, it is built on Foundry, and I was surprised like how much. And they have a commercial product in three months, and I was like, okay, man, they just released this program for Foundry for builders, and then this company jumped on it, and they have a commercial product. I mean, a lot of companies will not even finalize the spec of any new product in that time. So the kind of agility and speed, efficiency Foundry is making or providing to some of these entrepreneurs, I think that's quite remarkable. Okay, other companies does it also. Okay, but the way Palantir is doing, they are trying to institutionalize it. Okay, so for example, like when I was planning for my startup, I talked to big tech companies and they offered me in terms of some cash, in terms of some cloud credits, and on top of that, I mean, yeah, you can get a engineer, an architect, a site reliability, and some resources on top of it. But they do it in terms of masses. They have plenty of cash flow that works for them. But they don't do it in terms of okay, I am gonna do it in an industry that don't exist today. So if you see where Palantir is investing in these companies, especially in the day zero of what we call Foundry for startups, or in pipe investments, it's very strategic. Okay, so these are like high risk, high reward kind of industries, and given they have some of their equity exposure, I think there should be some decent financial gain at some particular time as well. Yeah, I mean, it's like again, like I said, this is something which market is underestimating at this point. I mean, this company is in a lot of places. It's in healthcare, biotech, automotive. It's in flying eVTOL. It's in mobility. It's in energy, going from carbon to oil and gas. It's in defense, and it's in defense like a lot of things. And it's in several government institutions. This is no mean deal. I mean, this is something serious. Okay, and this again we go back, and this is where I think he mentioned the word API. He mentioned it earlier. I think in terms of like the decision making. So guys, this is my view of world. I think probably some of you have actually listened it, and people have different view on it. Few people say that AI will eat software. The question is, in a very layman word, how? So if you are doing a task and that task can be automated, the question is always, would you do it? Okay, now different tasks have different exposure level, and at least a lot of tasks that can be automated. I think the biggest problem that everyone is doing nowadays is the automation of driving systems, and we see that we have enough evidence to say that yes, people would go for it. Okay, so making enterprise AI to do it for you at an enterprise level in operational environment, in high impact scenarios, I think you need a very fine or very different kind of AI at times. I mean, you don't just not pure AI ML solutions don't work. You need something that is built on kind of a hybrid physics based models, and you need a lot of data to actually connect with to those kind of systems. And this is an operations data. That means the amount of data that comes on every second. You need a very high level of reliability. So the requirements for API in terms of the systems with the microservices and business app, it's quite high, and it's going to increase fast. It has to be future proof ready. It has to scale fast. So from that point of view, I think yeah, I think it's a right branding and right step moving forward overall. I think Apollos we all have discussed. We all have discussed in terms of their edge AI approach using Apollo. And like I said, Apollo is their CI/CD platform, which is like continuous integration and continuous delivery. And yeah, I mean, a lot of companies don't have it. Actually, it's a domain in itself. I mean, if you look at the companies like Harness and their other companies, I mean, they are practically CI/CD company. So Palantir, one of the unique offering they have, or one of the unique selling point they have, is that they are quite integrated product. And you cannot have an integrated product in BigOS if you don't have a proper CI/CD platform for that. So from that part, I think Palantir is quite secure. Whatever I have discussed with guys, I mean, who have an idea about it, and I mean, they say that it is one of the best in the industry. And of course, I mean, like I said, if you ask me a pure CI/CD player, my pick is, I mean, I like Harness a lot. But yeah, I mean, Harness is kind of can work with a lot of systems, but I mean, this thing Apollo, especially the kind of use cases we have seen and the kind of impact scenario it works in. So when they say like this is where the no SaaS has ever gone before, I think they are still like kind of underselling it. Okay, I mean, we saw like when they say the edge, I mean, it's really edge. Okay, we saw the example of Meta Constellation. They are showing us kind of a submersible kind of a vehicle. Now, guys, this is, I don't know how market is going to cover it. This is big. This is real big. So, guys, I mean, I work in energy industry. I have been working in energy industries for 18 years now, and during that time, I have spent a lot of time working for different companies and different governments and regulator, banks, and so many other institutions. The carbon emission management as of today is one of the biggest challenge. Okay, we all hearing about COP26, what companies need to do. There has been a lot of commitments have been made in terms of net zero by different companies, including oil and gas companies. The question is, how do you do it? In order to do it, first somebody has to say what's your carbon footprint, how you have accounted for it. Somebody has to validate it. And getting and building your carbon abatement curve is not a simple exercise. Okay, and you need a kind of a regulatory approval on it. So in short, what we are saying that it's a very large, complicated, complex, sensitive problem where you need to look all your resources, including your revenues. I mean, that means you may be getting a large portion of revenue, but now when you see that revenue and the carbon footprint that comes on that portion of revenue, what kind of WACC you are using to evaluate it. I mean, it's not going to be straightforward. You need a very different kind of scenario planning. So when Foundry they said like going to put a carbon and emission management, guys, this is big. I can tell you right now, most of the companies I have come across, they always ask me, would you recommend a system for carbon and emission management? How would we do it? How it is actually done? There is a huge market. We are looking for a $1 trillion of investment probably in this decade, maybe far larger than that in terms of new energies. And you cannot do that until and unless you understand what kind of carbon footprint you are managing for it. I mean, this particular product itself has potential to bring $1 to $5 billion of revenue by the end of this decade, maybe more than that. Okay, this thing is big. There is no question about it. Now, this is a tough one, guys. I mean, we just talked about that how big is the carbon management business. Now, how would you compare carbon management business with crypto management business? Which one is bigger? I mean, they both are big. And since crypto is not my expertise, I cannot estimate for it. All I know, it's big. All I know that governments and banks and regulators are finding systems to manage it, and the regulatory compliance and the tracking is going to be quite a serious business. It is already a serious business, but it should grow 20 to 30-fold. So is it bigger than carbon management? Guys, I don't know that part. It's going to be really big, maybe more than that. Okay. Is it going to be again same kind of a category where you can generate a revenue of $1 billion to $5 billion over the next decade? I would say so. Yeah. So in terms of these, and these are very focused offering. That's what I like, and that's what I want Palantir to do, to create more focused offering, which goes to a client. It creates a footprint of Foundry in their system. It gives them the touch and feel of working with it, and it solves its complex problem in a very simple and impactful way. And that brings clients to spend more and buy more focused solutions going on to it. Okay, yeah, I think this is just more on the deals part. I think Meta Constellations we have discussed and we all love who follow the company. Quite a unique example, and quite a unique example in a way like that how serious they are in creating high impact scenarios. So, and yeah, I mean, like this is something we have not yet discussed in detail, and there's a perception that Palantir has a very strong footing in defense. They're also like, I think they're already almost like a doorstop of the IL6 clearance in general over all that. The thing is, Army and Defense is going to invest a lot on softwares, analytics, operationalizing AI, edge AI, things like Meta Constellation and all that. So whatever they are doing in terms of government, I think that should increase. That should increase by several folds. Because right now, whatever we know from public sources, the expenditure in these domains in government is actually going to increase by quite substantially, and not only by substantially in a dollar way. I think there is a growing awareness that we need to do it with companies who create meaningful value in a shortest amount of time, and that's the unique selling point for Palantir. So let's see how they do on that part. I think pretty much again, like several examples they shared in terms of like how well they are doing with some of these institutions. And yeah, I mean, you say that their EBITDA with Palantir. So this is what they are saying, that how much value they are creating with Palantir. And to be honest, the numbers are hidden, and I would assume so. But they are trying to say that their adjusted EBITDA has gone 4 or 5 times just by working with Palantir. So I think that's the message in up there. And in government systems, it doesn't happen, guys. I mean, these are very heavy, slow-moving dinosaur kind of systems. So driving that kind of efficiency is not that easy. Okay, so I think this is quite a statement that has been made here. Apart from that, I think that's all I have in terms of hiring. I think rest is pretty much. I think you guys will see in the financial update. Yeah, I think the one thing which I would still say I'm a bit not disappointed, but I would have loved revenue like 420, 430. It was a steep task which I asked for. But guys, I mean, we are talking about a company which is supposed to be or set on a path for a monopoly, and people say, and I mean, I believe in that the company could be $1 trillion valuation in this decade, maybe earlier, maybe slightly later. So there has to be a point where company has to start going into a rush mode. That means you plan your quarter and you say, I'm gonna serve this many customers and I'm gonna get this much revenue, but the demand in the market is so high that you are pushed to go beyond your wildest projection. So that stage is not yet arrived. They are having a very good growth. They are having a very healthy growth, and yeah, they are just not there where they just become like a supersonic or parabolic. I think that thing is still something we need to see. Apart from that, yeah, I mean, despite of their guidance for next quarter, which they say 418 million, and since they beat at least by 6-7, we can say 425. I would still want them to beat 450 if possible, because the reason, the way I interpret is that they are putting Salesforce behind it. They are introducing new models. They're also building some of these focus products. So it has to become a wedge of revenue over each other, and these wedges have to add on. So currently we are seeing very thin portion of these wedges coming in. So that is telling that the Salesforce bottleneck is still a concern. So that when I say concern, that means there is money left on table. That means if you have more people today who can go and connect to client, you can sell more. Okay. Now thing is, if these companies don't meet Palantir, they will buy something else. Okay. Can they switch to Palantir at some point of time? Yes, but in that particular case, Palantir has to ensure that their value proposition to these companies is significantly higher, like what we saw in the case of a government adjusted EBITDA kind of a thing. If that happens, it doesn't matter like which companies goes to which one. I mean, eventually a lot of them will come back to Palantir. If that doesn't happen, these customers are lost forever. So we cannot take anything for granted. And I hope Salesforce wise, I think they do even more than what they are doing now. So that's all from my side today, guys. I hope some of these points would be of some use, and feel free to let me know. I mean, what do you think overall in terms of the earnings, and what is your expectation moving forward? In short, it was very good earning. It was not their greatest earning, and it was not a kind of an earning that, having seen that, I would say I think it's probably the best I have seen. And I mean, this is remarkable. This is the key inflection point. I think they are good on the road, not yet at a point of inflection where they are gonna go supersonic or parabolic beyond what they are doing as of now. I believe the point will come. That point is just not this early. Having said, guys, I mean, please take care and stay safe. And remember, nothing of this is financial advice. It is all just my points in terms of as an investor, shared more for information and education purposes. Okay, I wish good luck for all the investors in Palantir and other companies in a similar domain. I think it's a very high growth sector, and now the sector is actually started realizing that the challenge of industrial B2B is very different from what you see in B2C, and I believe some of them will come good. Having said that, okay guys, goodbye.